Welcome to my more important analysis videos on Tuesday the 12th of December with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly sort of, slightly dollar negative move that we've coming through the markets today. The dollar had sort of regained a bit of ground, but it's sort of giving up that ground that it saw into the close last night. This is the dollar index, which rallied into the close. It's again just dropping away again. This is all coming ahead of the Fed, and the Fed meets today and tomorrow with the announcement of monetary policy tomorrow at 7 o'clock in the evening UK time, and subsequently the press conference as well with Janet Yellen. And the markets are fairly settled in front of that. Nothing too significant in terms of direction, but there is a slight sort of consolidation that we're seeing on these forex majors. Equities are sort of middle of the road, I suppose, as well. But we did see the S&P 500 and Wall Street closing at all-time highs yesterday, or at a closing all-time high, not the actual all-time high, which was an intraday move to 2665. We had a closing all-time high, and initially that sort of helped to improve sentiment in European markets, but that's just drifted back a little bit today. Now, interesting moves on the DAX. Can the DAX hold back above 13,100? Anyone who reads my DAX analysis in the mornings will know that that is a key level near term within the range, as it's a bit of a gap support. So filling that gap this morning, can it now fill that gap and move back to the upside again? It certainly has had a positive reaction at the moment. But the key move today has been in oil. Oil has a burst higher today through to 2-year highs on Brent crude. And that's come on the back of a pipeline in Scotland that's had some cracks in it, which has forced them to shut the pipeline, and subsequently oil has pushed higher. So strong moves up on oil today, helping the markets. But generally speaking, as I said, this dollar is sort of fairly sort of flat, and that's sort of coming as these treasury yields still struggling on the 10-year, and it is seemingly, I would say, going to be the case in front of this Fed meeting. There is the US inflation on CPI data tomorrow before the Fed, so that has the prospect of a bit of direction perhaps, but I think the market's going to take most of the move from the from the Fed meeting tomorrow night. 2-year yields continue to pull higher, and the yield curve, the yield curve flattening as measured on the 2-10 spread that I look at continues, really, doesn't it? But generally speaking, we're sort of fairly much consolidating, really, nothing too much in terms of direction today. So what have we got to look forward to? Well, we've got UK inflation that has literally just before I've started recording this message just come out. And let's get rid of that PPI input prices. And the inflation has just risen on a headline basis to 3.1%. Now that means that Mark Carney has to write a letter to Philip Hammond, the Chancellor of the Exchequer, in order to explain why the inflation is more than 1% away from its 2.0% target. So it's it's rising inflation. That's a 5.5-year high on UK inflation. But interestingly, that core CPI didn't move, actually flat at 2.7%. Now, into the afternoon, well, actually in the next half hour, we've got German ZEW economic sentiment expected to just tick mildly lower to 18. So it's still fairly positive on the ZEW there. Not shooting the lights out, but still fairly positive. And then into the afternoon, we're looking at US PPI, which is expected to tick higher on the headline and just tick lower on the core. So a little mixed move there expected this afternoon. Now, my chart of the day is the Euro Kiwi. Now, Euro Kiwi has been an interesting chart that I've been watching for the last few weeks, as this market has just sort of been consolidating within this uptrend channel, consolidating sideways, sort of tested the support at 70.80. Tested that support last week, but that support held. But then yesterday's big, strong closing bear candle was a big breach of that 70.80 support, and has fallen back towards the lows of this of this uptrend channel again. Now this uptrend channel has been in place since June, so this is a 6-month trend channel, and it is a pretty well defined trend channel. So if it breaks down that trend channel, then you could start to see some further downside towards 66.30, which was that November low. You got this 55-day moving average, as you can see here. 1, 2, 3 times the market has sort of come back to find support just around that moving average and pull higher. Now that's at 68.85 today, but look at these momentum indicators. 44 on the RSI. That is the lowest we've seen since September. And the MACD lines are accelerating lower. The stochastics are also pulling at lows not seen since that June low. So there is a deterioration going on in these momentum indicators that we need to be careful of. No confirmation yet of a breakdown, but it is certainly falling away. And this little neckline that I've got here of a top pattern, you could arguably sort of measure around about sort of 310 pips of downside from 7393. Sort of 7.4 really, down to 70.80, which is around about sort of 300 odd pips to the downside. So you're looking at 60, sort of 67.90, 68 figure area as sort of as a sort of downside, sort of 68.80 to 68, sorry, 67.80 to 68 figure being a sort of a target area. So there is still further downside potential in this move that has continued to drop away today. You can see here that the market sort of hasn't really had its pullback to the neckline yet. Had a reaction high yesterday. No, yes, it did. My mistake. 71.15. This line should be lower. There you go. Had a pullback to the neckline yesterday and fell away. So it is sort of testing low, and look at all of these moving averages falling away. The momentum indicator is negatively configured. RSI failing at 40. MACD lines crossing lower again. So it is all sort of suggesting that intraday rallies are a chance to sell now on this market. So yeah, this is looking like a deteriorating chart now on a near-term basis, but can it break the trend? Obviously the trend is your friend until it breaks. It hasn't yet been broken. It's basically bang on that 69.45. It's pretty much bang on that at the moment, and really is testing it. So will it break down today? It'll be interesting to see. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.